With that in mind. You have sound in your presentation?
I have my preferred, but I got one for the judge of review. We got like.
Do you guys want to take the seat over here?
Perfect. That will be fun. Perfect. The possible. Yes, a little.
Do you wanna make another 5 minutes?
Yeah. Okay, it's probably. No, I know. We have it.
But yeah, it's ready. You don't need to see any notes or anything about it.
No, I don't. I just need a clicker. Oh, I saw it here.
There was a clicker. I don't have a dongle.
Oh, okay.
What I can do is I can run the slides for you, so you can save it. If not, I'll unplug the.
Oh, you only have one USB.
Yeah, unless you have a hub on you. If you have a hub. I don't. Oh.
That's fine. Anyway.
Good morning. All right, welcome everyone to Zero Down Financing.
We're gonna wait a few minutes for them. They're on his way.
We are, but I want to make sure that everyone knows that courtesy of LoanDepot, today we have lunch, so let's thank them for that. Panera there's some sandwiches, some salad. Feel free to grab some for the meeting, and we're gonna start in about 5 minutes. He'll give us an intro of who he is, what he does with his team, and then we'll get started on this great option for you all, okay? All right, no, not done. Oh, maybe. Diego.
I don't know.
You know what I'm saying? We were at school. So. Yeah.
That's the likelihood of getting a discount on a policy without the insurance funds. None.
Nope. They don't budge. We've changed, we've gotten a different policy with Angel for LGI, but the customer would have to pay.
Totally upfront. The yearly premium. Yeah.
LGI doesn't cover it unless you use LGI insurance. They're pretty strict about that. So, I was gonna like it. You guys feel about that in our lawsuit?
Not good.
And it's gonna get wider, it's gonna get more interesting now that they're including. Buyers now, it's. First with the sellers suing, now the buyers suing. It's kinda, I don't know, I think it's kinda ridiculous. But, it's definitely gonna change the industry. Do you guys have buyers sign an exclusive agreement now?
That's what our broker tells us that we're gonna start doing.
Yeah, you get a charge on it. Now that you said something.
There's been questions about possibly the financing side, the financial institution possibly having to look into different options of incorporating
Those calls.
those commission costs too, because buyers obviously can't afford it, and so now they're trying to look into programs for that too.
So as it stands right now, there is no down payment assistance program that will allow you to use it for that, as it stands now. Will it change? It could. I don't think it will, though. We can't finance it into the loan. So it's going to be interesting what rules have to be changed and that to accommodate, because of affordability, that's just making things worse. What's gonna end up happening is sellers are at the right contributions. Which means the whole. Now, the other thing that I think is gonna happen, all this, just my opinion, is buyers agents are no longer gonna make 2.5%, they're probably gonna make 1 to 2%. Because of the whole affordability. Because sellers are not gonna want to, that's what it's going to be. I think it's a ridiculous lawsuit because in the very beginning, on the MLS, you could put $1 into a operating program. That's never been an issue. But it tells you something that 9 jurors in 4 hours deliberated before the game. They saw something. And those same sellers that are suing also have to buy, so now they have to buy. It's ridiculous. To me, it's just a ridiculous premise, and I don't know why it had legs. I really don't. But it's going to be a huge change in business, in the industry. And NAR, I think, will cease to exist, because everybody's separating themselves from NAR. The value not there, that they really don't provide any value that it is, and not works. I don't know what's gonna happen with the big broker, because who has billions of dollars to that? No companies have billions of dollars in that. Class is over. Oh, you found the hub? Yeah. Anyway, they settled, but they're still named in other lawsuits.
I mean, I think it's gonna affect some people. I now that the Michigan buyer agreements were common.
Buyers pay the.
It's the way that they're worded now, where it's like, you know, your goal is this, but we'll credit back for whatever we get offered from the seller. Stuff that we would have to pay us. So maybe it wasn't so common, but they were still signing the agreements anyway, they were doing retainers.
So there's probably gonna be an addendum that when you put in your offer, part of the offer, the seller has to agree to pay this much in buyer's commission.
Probably, commission agreement.
I think it's
On the right, a lot of realtors that are doing good will probably fade away, so.
yeah, that's true, it'll be big of her. I mean, in addition to the fact that this year is probably gonna be the biggest drop off for no other candidates. Well, not real. Oh, it's late. So now, both of them have a ruling on it, so now that they're not going to be guaranteed a cooperating agent commission, they just say, okay, let me go back to work at Home Depot or Mario.
How do we like it? Do we like it this dark or does this work?
I think that works.
That work? Yeah.
That's clear.
I'm democratic here, you know, here, what are the? Does everyone want?
I mean, it's coming at such a bad time. The business is down right now, it is volume, inventory low. You have to just double and triple your efforts.
Cost more money for buyers, now to buy it under four.
You know what, I'm.
Hi.
Now, but you know, on the bright side, I'm sure. The thinning of the herd, the reduction in realtors and officers leads to people that do it full time and that are really dedicated to their craft. To make it network, yeah. So little onesie twosies that they did, you know, if 25-30% of the workforce of the sales force dropped off, and that could be a good thing. All right, well, I guess we'll get started. Maybe get one.
So you know what it was used for. Yeah.
Hi, good morning.
I'll give you
Arelis, hi.
Hi, Daddy.
Hi.
Yeah.
Where's her office today?
It's work.
She's somewhere in the United States.
Where's the office? Did she hear me?
Instead of where is Waldo, we're gonna do where is that end. You're on mute, you're on mute.
Yes, I'm in Nashville. Hi, everybody.
Let me,
Where's her office?
Acabó la presentación. Ya.
bien, bien. Good, guy. Hello.
Arelis, you hear me?
Yeah.
Five, four, three, two, one. Good morning, everybody. My name is Mario Cerrato. I work for LoanDepot. I'm an area manager for LoanDepot, and you came right on time. Have a seat. So LoanDepot is the second largest lender in the US. If you guys follow baseball, we have the Marlins Park. It's called LoanDepot Park. And we have access to the suite. If we have any baseball fans, come on in.
Hi.
Oh, no, you have to sit down for the presentation, unless you're serving us with a lawsuit.
No, that's. This is the.
That's what it felt like. So, yeah, so back to what I was saying, so if you guys like baseball, you know, there's gonna be opportunity this season coming up for you guys to, you know, join us in the suite and watch the next game in a nice comfortable luxury suite. You have a question?
No, yeah.
Oh, you're a baseball fan, okay. With me, I have one of my loan officers, Patrick Flores. So between both of us, we'll be, talking a little bit about something that's very important that kind of near and dear to our hearts, and it's gonna help us sell more properties. You want to give these out? So these are excerpts from the slides that I think are important and relevant to what we're gonna talk about today. So the topic of today started off with just one particular program called Access Zero. But I decided that I'm gonna present to you three programs that we use pretty commonly to help borrowers get over the largest part of the transactions. So the three programs that we're going to use are, if I can figure this thing out.
So is the arrows to the side?
Yeah. Our Hometown Hero, which is the most lucrative of the three products that we're gonna talk about. And what I mean by that is the one that is like the best deal in town, sort of thing. But it has limited funds. The other one we're gonna talk about is Access Zero. which also is a pretty good program. It'll let the borrower do 100% financing, but the rates are not as pretty. There's some discount points, and it also has a payment on the second mortgage, whereas Hometown Hero does not.
I have a question, this handout that we were given, is that also part of your slide, so it's not?
Yeah.
Okay, it's not-
It is. This one is- And then the third one is another program called Florida Assist. It's $10,000. There's a $15,000 version in Dade County. It's an okay program, and we use that as a fallback program where we can't put them in anywhere else. So they all have their uses, they all have their ideal clients, ideal candidates. And so we're gonna be going over all three of them. And the whole purpose of this whole thing is to overcome the biggest obstacle to home ownership, and that's down payment assistance. And now we're gonna add to that cooperating broker commission. So, all right, let's get started. Okay, tenemos una falla aquí. Where? Yeah, don't worry about it, I'm just gonna.
Right now,
Too late, you're fired.
try now, try to put it in.
Okay, what'd you do?
And there's something on the first slide that you have to click it multiple times
Yes.
so that it gets going.
Oh, okay, all right. It's still asleep. So according to NAR, which probably will cease to exist very soon, the largest obstacle is the down payment, right? People can buy, especially the millennials, they have this money, they graduated college, they have student loans, and they're still living at home because they have been unable to save for a down payment. Mom and dad cannot always give them the down payment, and the percentages are pretty large of the people that are in the wings, ready to buy, but can't buy because of the down payment. So here are your potential home buyers. So all of these borrowers are just sitting there waiting. These are the ones that can do it, or they're waiting for a family or a friend, or if they're not planning on buying, or they're gonna borrow against, their parents are gonna borrow against retirement. So the numbers are in your favor to capture these borrowers that can buy but don't have the down payment. So what do? They rent, right? So what do you need to rent? You need first, last, and security. If any of us are working in this market, we all know that the rent market is very expensive. I think the minimum rent nowadays is $2,500, $3,000, right? For a 2-bedroom, 2-bath, anywhere. And if you're gonna buy a house, if you're gonna rent a house, it's more like $3,500, $4,000. So in order to rent a house today, what do you need? First, last, and security. Yeah, exactly, well, that too. So you can make the case that most people have enough to rent, they have a first, last, and security. So if you take that first, last, and security, or maybe even less sometimes, and you put that together with some down payment assistance, you went from making $800 to $1,000 commission to making $5,000 to $8,000 commission. Because the commission exponentially once you go from a rent to a sale. So that's what we're banking on. We're banking on taking these renters that have their first and last and security deposit, combining it with down payment assistance, and we now have in our hands a buyer. We have someone that's going to be eternally grateful to you because they came to you to rent. And you turned it on them and you said, no, you're going to buy, you're going to be a homeowner. You're going to build equity, you're going to build wealth in the United States. The best way, the fastest investment vehicle that exists historically and now is real estate. There's no doubt about it. Sure, you can put money in Dogecoin and Bitcoin and get lucky, or stock and get lucky and triple and quadruple your investment. But you can also lose all of it, right? That doesn't happen in real estate. And if it does, it's only temporary. You just hold on and the market will always pick up. And nowadays, with the low inventory that we have, it's guaranteed money. It's guaranteed money. There's nothing like real estate. So here's the thing though. So this guy, Ron Weber, he's a financial analyst, and he says, if it's too good to be true, it's probably fraud. And that could be true, but in this particular case, it is actually true. And let me show you what's available. So here are the 3 programs we're going to talk about. We are going to talk about, let me see if I can get this pointer over. Uh-oh. There you go. There you go. So Hometown Hero, it provides up to $35,000. This other program, which is issued by the same organization that gives Hometown Hero, gives up to $10,000. And what's good about this program right here, it has some restrictive requirements, but some less restrictive requirements. But the most important part is that money does not run out. That program has reached what we call self-funded status. And here's what that means. It's been out long enough that people that got that program 5, 10, 15 years ago, have already paid money back into the fund. And so because of that, that money has been replenished over and over again. That one, I know you went to give it to me, right? So that money has been replenished over and over again, so there's never a concern that that money is not available. Hometown Hero came out in July of last year. And the money went like that. A month and a half, 2 months, $100 million evaporated. So that money is out in the ether, out in the market, people are holding on to them. Some of it, some people sold, some people fell out of compliance, but by and large, that money's gone. So what happened? We went through from, I think it ran out in September, in that area. And then the only money that was available was fallout money. And what does that mean? People reserved it. And for some reason, the contract fell through, the appraisal fell through, they didn't close on time, whatever happened, it fell through. So that money came back into the pool. So Florida Housing, which is the agency that runs this, put the money back and made it available. So it would put it like a couple of million at a time and it would disappear in 3 hours. Because the program is very good and everybody wanted it. The problem is that you have to have a contract in hand in order to reserve your money. So what happened now is because there was such a high demand, they got 35 million or 36 million in emergency money. Everybody in the world is posting about it, right? So right now there is 29 million left. So in a matter of a week, 6 million is gone.
Can I start with
Yeah,
that?
sure.
So, if you already have a contract executed, your lender can try to get you into this program, right?
Not any lender, but yes. No, the reason I say that is because most brokers cannot. And if you're dealing with a credit union, they can. If you're dealing with a bank, they cannot. So this is more for the retail organizations and some broker shops.
Do you guys, does it have an income requirement for this?
It does, we're gonna go over that.
Oh,
So there's an income required for Dade and Broward County. Score. And then the third program that we're gonna talk about is a new one called FHA Access Zero. And what this program does, it gives you 100% financing. It gives you up to 5%, a 5% second mortgage based on the sales price. So if you have a $300,000 property, you get $15,000 credit. And the reason I say it that way is because you can use it for down payment or closing costs. Okay, so don't think about it as it's being applied to something. It's just going to be a credit on the closing exposure. You're buying for this sales price, here are your closing costs, minus the down payment, minus this credit. All right, so don't get fixated on it's only for down payments for anything. Well, for closing costs or down payment assistance. So if you think about it, an FHA loan, the down payment is 3.5%. 3.5%. So you have 1.5% left over that you can use for closing costs, discount costs, whatever you need to use it. So it's a good program. It's definitely 100% financing. The borrower does have to bring in some money. Now, why is this program not as nice as this program? You got it? Well, you have to pay both of them back. But the difference is that the Hometown Hero has a 0% deferred interest rate on the second mortgage. So that means that that money is sitting there, you're not accruing interest, and you can pay back whenever you want. 0% interest rate, no payment due monthly. This other program is not so nice. It'll get you in the house, however, you gotta pay that money back immediately. As soon as you make your first payment, you're paying the first mortgage and the second mortgage. And the interest rate, it's not pretty even. It's 2 points above your first mortgage rate. So if your first mortgage rate is 7.99, this is 9.99. Hold on, everybody calm down, hold on. Don't throw things. It's small, you're not paying that. You're paying small enough. And you go, either you rent or you buy. You have to look at the positive side of this. There's another positive thing about it, there's no inconvenience. Anybody, you don't have to be a first time home buyer, anybody.
Especially better than
You have to have a 600 credit score. But if you have a 600 credit score, you only can get 3.5% assistance. If you have a 620 credit score, you can go up to 5%. And we're gonna go over those details.
On a primary residence, right?
Only primary, oh, there's no such thing as a down payment assistance that's gonna help get an investment. That makes no sense.
So does it go for the same term as the loan?
No, good question. It's a 10-year term, 10-year second mortgage, yeah.
Years?
So you have to say,
And the payment structure is structured, the payment is structured in such a way that you'll pay the second off in 10 years, or if you refinance, you pay it off like that,
That has to be calculated into the DTI though, too, right?
100%.
On the
100%. So that's part of the problem with the program, and the maximum DTI is 50%. I mean, look, there's candidates for, we're booking them, it's working. When hometown hero, ran out of money, there was a little bit of period of time between that and when we rolled this program out. Now, we're booking these loans, so there is a buyer for it. And the way we tell buyers is, you guys heard it, right? Marry the house, take the rate, marry the house, right? That's the same thing here. You're basically dating the program and you're going to marry the house, because in a year, when rates go down, because next year is an election year, and we all know what happens in election year, they all wanna get, somebody wants to get, elected, so they're going to reduce the rate one way or the other. It is estimated that by summertime next year, the rates are gonna be in the 60s. You know how many people we've locked in at 7.8%, 8.25%, or these bank statement loans that locked in at 8.5% that are now eligible for regular financing? There's going to be a mini refi boom. And then if the rates go down even lower, there's gonna be a daily refi available. And people wanting to get money out of their equity to buy new houses and upgrading and that kind of thing. So there's opportunity in the wings if you just hold on to your licenses.
Another good thing about the program is that Hometown Heroes, we haven't touched on credit scores, but you're required a 640, at least a 640 to qualify for the Hometown Heroes. FHA Access Zero, you can get it from a if you're 600 or over, you can get the program. You guys would be surprised, and I'm sure you deal with it a lot daily. A lot of people are within that range of 600 and 640, and we've seen so many that we cannot get into Hometown Heroes because they don't have that 640, that can fall back into the Access Zero plan. So that's another benefit, even though that we have a loan that we have to pay back and it's at points over, there is a market and there is customers for that.
So, what we do in our line of work is we have somebody with a 635 or 639, I mean, that happens all the time. We will try to get their score up, but there are some times that you just cannot, there's nothing you can do. We have a simulator that we plug in different variables and it tells us if we can get the score up. And there's a lot of times that you can't, and then we gotta fall back on the program, right? They're in the house. That's what I think.
I have a question, are all these programs limited to first time home buyers or?
This one is not, yeah, this program is not.
Okay, so.
These two are. However, if you're a veteran, you're the first time home buyer, you're exempt from all that. Okay, all right, so let's dig in. Ivy, you can full screen this? Or is that, am I?
No, I'll take it. I'll get ready.
Okay, so the first program we're gonna go over, thank you. The first program we're gonna go over is, you can leave like that, it's better that way.
Yeah.
Yeah. Okay, so the first one we're gonna go over is Hometown Hero. I like this program has received a lot of fanfare, and for just reason, it's a great program. I'm gonna say a couple of things about the rate, because this is the only obstacle that we have. I've done a bunch of these with Andres and I have been working together for a few years now. And the one thing that people complain about is the interest rate. I'm gonna give you an example. Borrower comes in, they have a 780 credit score. They have, $50,000 in the bank. The day are walking on water in today's financial world, right? They have a good job. There's no reason why they have to take a subpar rate. Or maybe they don't have the down payment. I'll take that away. They don't have the money in the bank, but they have great credit, they have great jobs. And they got, they have everything they need to buy a house except the down payment. And so they'll come to me and they say, oh, no, wait a minute. Did you see my credit score? I need a better rate than that. And the answer to that is, I'm sorry, but it is what it is. Everybody gets the same rate. We don't set the rate. The state does. And what I love doing is giving them the link. Here's the link. Look at the rate. It's available to anybody and everybody. So that's the one obstacle that people have to understand, is that you cannot, there's no such thing as a free lunch. It's going to be, well,
Only today.
by the way, even today, don't forget, I expect a loan from each and every one. So, yeah, so the interest rate, it's not terrible, to be honest with you, like today, it's probably 7.75, I mean, look it up if you have 10. So it's not, I mean, compare that to a regular FHA rate, FHA is probably about the same. So it's not really much of a difference. Morning. Hello.
Good morning, so sorry.
Oh, sure, throw it now. So it's not, okay, so let's go over the requirements. So requirement number one is that you have to be a full-time employee. Full-time is defined differently by every employer, not every employer, but a lot of employers do 40 hours, but there are employers that consider full-time 36 hours. So in the first rollout of this program, this was a highly contested requirement, and there's a lot of people that complain about it because they were turning away nurses that work 36 hours a week. They're full-time. So they changed the rule. Now they're saying you have to work at least 35 hours a week. And here's the problem though, some people work 35, then 30, then 29, then 47. You have to work 35 hours a week at every pay stub that we provide. Okay? So the smart and low will look at the pay stubs before just turning them into the underwriter. If it doesn't say 35 hours, we tell the bar, hey, work 35 hours moving forward, and I'll hold off on turning into the pay stub. Okay? You gotta kind of know what's up.
7.25 FHA.
Oh my God, 7.25 FHA there. That's phenomenal.
Oh.
That is phenomenal, believe it or not. Okay, this is a mistake. Veterans are not exempt from this requirement. I don't know why they look at there. I'll take that off. First time home buyer. You cannot have owned a property in the last 3 years that you have not lived in as a primary residence. You can own a property if it's a rental, and you've rented it for the last 3 years. It's a misnomer. People think that a first time home buyer is someone that has not owned a home. Not true at all. Another misconception is that people think, oh, I got divorced and the property was awarded to my ex-spouse. That doesn't matter. You owned it in the last 3 years. The only time you're exempt from this requirement is if you're a veteran.
In theory, could you use this loan every 3 years?
No, you would have to have gone through a period of time where you did not own a home for 3 years.
Okay. Okay, so let's say you rent it for 3 years.
That's right, thank you. Like a cooling period. You could call it that, but this is just not how the government defines a person home buyer. Yeah. The company must be based out of Florida. This is an important thing. So, what's the name of the company? Uber. Uber does not have offices here. So, if you work in corporate Uber, you work from home, because Uber only hires remote employees for the most part, you cannot get this one. You must work for a company, could be based out of California, as long as they have a branch and office that you report to here in Florida.
Even if it's based on-
subsidiary in Florida works.
If they report to that local office, yes.
What do you mean by report? That you go and sit there?
You don't have to go and sit there, you could be a remote worker, but that's your home office. Yeah, this is also another very.
That's what you just said.
No.
That is the exact example that I used.
I was trying to understand very well, so it's Uber is not qualified.
No, son que Uber no califica.
Yeah,
Porque Uber no tiene oficinas aquí.
I wanna make sure.
Yeah,
So it doesn't have to be necessarily headquartered out of Florida.
no, no, headquarters, that was the old rule. And they
That
took,
changed that.
they changed that, now you just have to be based in Florida, a Florida office, some brick and mortar.
Okay.
Brick and mortar, yes, that's the
Yeah.
term that they use.
Got it.
Okay. Home buyer education is required, it's very easy, it's an 8-hour course, it's free, it's online, and here's a dirty little secret, you can get it done in 45 minutes. Click, 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 and answer the dumb questions, put it in the house. Another thing that's important to know that anybody and everybody that's going on title must complete home buyer education, so a non-borrowing spouse will be the example. Now, you cannot add anyone on title. The only person that is allowed to be on title in this program, and every program I'm presenting actually, is a spouse or a borrower. So as an example, this has happened. Mom and dad are buying a house. Oh, I want to put little Timmy on title in case we pass away. Nope, can't put little Timmy on title. But you could do that on the contract.
No, you should.
Wow.
That's paramount.
Are you telling people how they should be on title?
Paramount.
Strike that from the record.
That's another class for another day.
Yeah. So this happens pretty regularly, so if you think about that, when you have your initial conversations, because, you as realtors are trusted advisors for your buyers, and they might mention that in passing, and at that moment, you can kind of nip it in the bud. Another issue that comes up is, oh, I'm separated from my husband, and I'm getting divorced, but I'm not getting divorced, we're fighting it, and blah, 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 and so I buy a house. Well, that husband you're fighting with, well, you're married.
Not-
You're married. Florida does not recognize separation. You said something?
And then non-married couples that have that issue, they'll get that together.
Well, non-married couples is not an issue because they don't understand it.
But that's what I'm saying, so, yeah, like me, so, we're not married, and if I'm the one doing the loan, then he can't go on title.
Correct. Correct. I think you put a ring on it, yeah, so that's another nuance of the program. So the home buyer education, another thing I'll mention about the home buyer education, I got sidetracked in this row, so I'll talk about married people. So everybody that's on title has to complete the course, but if you're married, there's a question in the course that says, hey, are you married? You say yes, and it'll ask you your spouse's name. You put your spouse's name, not only one, you have to take the course. That's important, because then they'll give you the thing, and it only has, the husband or the wife's name, and then at the end, the last minute, they say, oh, no, the spouse, the non-married spouse has to also do the course. Kind of annoying, but you know that up front, when we do these loans, we send instructions, we know they're married, they have a little template that says, hey, put your spouse's name on there. And ask you who your lender is, like lender, LoanDepot, and name the lender, so I can automatically get the certificate. Minimum credit score is 640. Maximum debt to income ratio is 50%. Now, obviously, we don't expect you to calculate debt to income ratio, that's our job. But there is a ratio that we have to respect. And actually, your maximum debt to income ratio is 50.49 if you're using a particular flavor of the program. You guys know that they're Fannie Mae and Freddie Mac. If you're using Freddie Mac, you go to 50.4%. When we use Freddie Mac, it depends, that's for us to figure out. But that's a little bonus, piece of knowledge that you guys can know about. We can close these in 30 days or less. Now, if you're using a broker for these, you're not gonna close in 30 days because brokers don't have delegated underwriting authority. So Florida Housing gives, in order to do this program, they have to underwrite the loan unless you're a big enough organization where they say, okay, we trust you to underwrite this loan yourself. And if something goes wrong, we don't buy the loan for you. But brokers don't have that option. So you gotta add an extra 15 days. So here's what happens. You go with a broker, you do a hometown hero, they can do it. If their organization allows it, some of them don't, because these are not profitable loans at all. They make no money. So they'll do the loan, they'll underwrite the loan, then they gotta send that package to Lakeview Service, and then they underwrite it. So then when they underwrite it, they'll come back with extra conditions, they gotta go to the borrower, they look at the conditions, they agree with the conditions, they gotta go back to Lakeview. Lakeview says yes or no, they say yes, if they say no, you gotta do that game. So you gotta add an extra 15 days. Now, if you're dealing with a lender that's large enough, that has delegated underwriting authority, that situation does not exist. Everything is on us. I closed these in 10 days. I mean, we could do these super fast. Another beautiful thing about this program is that the seller does not have to sign anything. The seller does not even need to know that the borrower is getting assistance. It's not important. It's not something that in their purview. It's not something that they're gonna see. It's not something they have to sign. It's none of their business. And why is that important? Because there's a stigma when it comes to down payment assistance. People, sellers think, oh, no, he can't afford it because he's getting down payment assistance. That's BS, they shouldn't even be thinking that. You were a seller, you were a buyer at one point, it's not a fair assumption to make.
So on the sales contract, it asks, it states what kind of mortgage it is, FHA, conventional.
These come in all those flavors.
So which on the sales contract, which do we put?
Depending, if you're going, so hometown hero comes in conventional hometown hero, FHA hometown hero, and VA hometown hero. So it depends on what the customer, to be different, but you would just pick conventional, FHA or VA. The loan commitment period, identical, you could put
I
5, 10,
think
15
this
days.
is different because this has, doesn't have to go on the, as this contract, because it's another application, right?
No, this, I mean, this is treated like a regular.
Yeah.
There's nothing different about it. So the loan commitment period, is identical.
That is something that is not.
The only thing I'll say about the loan commitment period, which is like in Paulina's word, is another class for another day, is that the new as-is contract added the appraisal to the loan commitment period. So now the loan commitment period includes the appraisal being completed. So if you put 7 days, can we do it? Yeah, but everybody has to be on board.
Unless you have the appraisal.
No, appraisals are coming back fast.
It should be a
The volume is down. Yes, they're coming back.
If you miss your loan approval period, unless you have the appraisal contingency.
So what does happen?
What happens if you miss the loan approval period?
Even those financing guys out there.
The contract.
No, you're-
Contra becomes cash.
She said it.
You're a veteran, you don't count. She's a veteran, she doesn't count. That's like, okay, turn here now.
No.
No, I mean,
Jermaine, what happened? All of you guys have been to my contract training classes.
Let me give you
So
a
every
hint.
single one of you guys should have
Let me give you a hint. Let me give you a hint.
Go, I have.
You sign an offer letter, it gets accepted, you write a check for the earnest money deposit. There's your hint.
Lose your money, pretty much.
You just earned money deposit.
That's what I just said, that's literally what I said. That's not the answer you got anymore.
Oh, it's not?
No. Anybody. What happens to your contract if you meet that loan approval period? No. You must have it, yeah. Like a cash deal. Like a cash deal. Let me tell you, what is that? Contract is on the 28th. You better hope you can close with your. Listen, all of you. Contract training in this office is on the 28th. All of you better be.
Yeah. me too.
Especially the Nobel. Answer that. I didn't start it right.
And then he's got,
Because she got it right.
and Isabella has some other.
And Annalise is there. Say hi, Annalise. She has a pass.
Someone.
11.
I'm gonna check the calendar.
Yeah, and I think
Do you have the calendar in your phone yet?
Okay, back to this.
Back to the law.
Okay, so we're here. No seller addendum required. It comes in conventional FHA and VA loan types. There's no origination fee. And there's another really nice thing about Hometown Hero. Again, this is why this program is so great. You know those pesky transfer taxes, dot stamp, beat stamp, 0.7% of the loan amount, 0.35, well, 0.35% of the loan amount, and intangible 0.02% of the loan amount? Wait. That, I mean, on a $400,000 loan, that represents a couple grand.
It waives the whole loan?
The seller, the buyer does not have to pay any transfer taxes.
Oh.
There's no origination. There's a small program fee, I think it's $400. Nothing compared to the 2,000 you just saved on not having to pay transfer tax. So this is like a super jam packed with features loan. Here's the other one, reduced MI. Does anybody know what AMI is here? Area median income. So if your area median income is less than, is 80% or less, your mortgage insurance gets reduced by about 40%. So if you're paying $200, you're gonna end up paying something like $120, $130 a month. What is the AMI for Dade Bar and Palm Beach? Is a bad for that. It's 67,600. Not a high number. So, but if you have somebody buying a condo that doesn't, oh, you don't need a lot of money to make, those would be good candidates to get reduced mortgage insurance. It's called charter mortgage insurance. So this is another product that also offers that. So you got reduced mortgage insurance, you got the 5%. You don't necessarily have to be a first-time home buyer, just because you own the property, as long as it was rented. And the assistance doesn't have a mortgage payment on it. So I'll stop here before I jump to the next program. Does anybody have any questions?
Yes, I do.
Go for it.
Mario, you said you don't have to be a first-time home buyer?
You do unless you're a veteran.
Okay.
Let's go out to
It's coming from up there, yeah. I have my audio off and I'm ready, connected to audio.
I can't hear you, Dayasi. I can only hear whoever is closer to the door.
There you go. Here are the income limits for the Hometown Hero program. Miami-Dade County, 154,800, that's pretty generous.
Yeah.
For a down payment assistance program, that's pretty good. Broward County, 144,000. And then and then you have some, Palm Beach County, 146,100. Hey, of course. You had a question, yeah. Oh, sure.
No, there's nothing on the chat. AMI is, if it's lower than 80%, then you're able to,
Yeah, which is 67,600.
but if it's lower than 80%, you're able to what?
You get reduced mortgage payments. So here are the loan limits. Also conventional up to $750,000, an FHA loan up to $557,750. That number is going to change, should go higher, January 1st. That $750,000 actually begins January 1st, 2024, but we can offer it now. The problem is that conventional Fannie Mae and Freddie Mac always announce their loan limits in November, but HUD doesn't announce their loan limits changes until January. They make you wait for the last day. So I would say that, you know, somebody making 100 and you guys, Dade Broward County, it's pretty good. That's a pretty good number. It's $12,000 a month. This one's even more. For you to get a down payment assistance program, it's really good. Typically, down payment assistance programs, you max out like $70,000, $80,000 a year. All right, so here are some samples. If you're not working, no, you know what to see like that's fine. So here's what I did. You guys have it on your sheet. So what I did was I gave you 3 sales prices here. I used the FHA version of this program. And so here, and by the way, this is what we give customers. I don't know if anybody, we worked with anyone that's seen this. I know Arelis has. I think I've sent it to maybe Paulina. So we give a side by side, especially when they're shopping. We pre-approve some. I know you've seen it 1,000 times. We pre-approve somebody and they don't really know their range. So I like to give it to them in $25,000 increments so they can start budgeting. And I'll use some assumptions. Assumption 1 is the taxes, right? We don't know what the taxes are gonna be. So
Anyone need handouts? Yeah, everyone good?
right, so $375,000 property, that's your loan amount, that's your mortgage, your MI factor, which is the same across the board for all FHA loans, unless you're putting 5% down. I put taxes at 3,000, maybe a little unrealistic, and I put insurance at 2,500. So interest rate dropped to 7.25 now, but when it was 7.75 yesterday when I did this, this is what your payment would be, right? At 375, at 400, at 425, all in taxes, insurance, and everything. And then your cash to close, we can't see it. Well, you guys have it on your sheet. What's the cash to close on the first, second, and third? Who can show me?
7,279.
Isn't that less than first class of security?
Yeah.
Yeah, this program is phenomenal. And there's $29 million left over. If I was a realtor, I'd be calling all these customers that decided not to buy, that decided to rent instead. I would even encourage them to break their leases. Why not? Why not? The money's gonna run out. They would have to wait till July of next year to purchase. Break your lease. This makes total sense, right? Lose your security deposit and buy a property for $7,000. No brainer. The higher the sales prices, the less money they have to bring. That's crazy, that's not. Can anybody tell me why? Any mathematicians here? The higher the sales price, the less cash flow we have to bring to this program. Can anyone tell me why? 5% or higher number?
Yeah.
Is more, 5% or lower. Number. So if you're buying a $250,000 house, you probably have to spend $7,000. If you were buying a $600,000 house, you probably have to spend $4,000.
Yes.
It's crazy. Because you can get up to 35,000. 5% of the loan amount up to 35,000. It's an incredible program and there's $29 million left over. Now, 29 million is not when you first mortgage it, so there's plenty of room. So if you take 29 million and you divide it by the average down payment assistance amount of $20,000, can someone do that for me? 29 million divided by $20,000?
She's the numbers girl.
You put, what, 1,450.
That sounds too low.
Exacto, nada más, 29 millones dividido entre 20,000.
Yeah.
14. That's 1,400 loans. That's how many loans are available. It's gonna be give or take, depending on the average BPA, but that's how many loans are available.
So I have a question.
For the whole lending industry.
So, no, I just need to make sure I understand. So, this gonna be the longest the person will pay with everything including on, $275,000. Yeah, and, the hometown you program, when do you start paying it back?
You don't,
Oh,
it's 0% interest, 0% payment required.
okay, so you guys.
When you sell it, you have to return the money.
And what?
Return the money, when you
Yeah.
sell the property.
When you sell the house, or if you refinance, or if it ceases to be your primary
You
residence.
don't take out the deposit, yeah.
You
Yeah,
have
but
to
it
pay back.
doesn't have a time limit, some, you know, some
30
program
years.
is 30 years. Some program like 5 years.
Yeah, no, it's 30 years.
Yeah.
It's never forgiven. The idea that this will reach self-funded status at one point, and it never went out, but we're 5 years away from
Claro,
that.
you got the equity of the
Yeah,
property,
yeah.
the extension time, and you start paying the whatever money.
That's the best way to see it. The way we sell it, the program is basically advancing you the equity on your house. Historically, homes are known to value in price, so the problem for you not getting into that house is you don't having a down payment assistance. So Florida Housing says, okay, let me advance you that equity, and whenever one of those things happen, you'll pay that back. But at least you get into the house.
Jermaine?
So I know it said don't payment assistance, right?
Yeah,
Well, let's say I don't need it. Can I still get it?
No.
No,
you can't. The program requires that you take the down payment.
No, I'm gonna take the money. Remember, it means like free money. Let's say what you do 30 years, it's free money. Right? Because I'm not gonna sell off. I'm gonna die and leave. I'm only 30 years and die.
Okay.
Right? But I have 100 million in my account. But I wanna use the program. I still have a job and it can, I meet the requirements for the
Yeah,
job.
you could, it doesn't matter how much you have.
So I can still get it.
Yeah, you can still get it. We don't do that analysis to say that I know you have enough money, you don't need it.
Okay.
Yeah, there are some programs. There are some programs that do have, an asset, cap that you have left over, this is not one of them.
Okay. So there's no equipment. So it's free money.
It's treated as a 0%. Yeah. Okay. All right, so the next program is called the Florida Bond Program. And it's very similar to what we just talked about. All the requirements are almost identical, except it doesn't have a job headquartered requirement.
no, that's good.
That's not a requirement, but it's only 10,000.
So with respect to the headquarters job requirement, so that's only for W-2 workers.
No,
right?
you can be self-employed. What we'll do is that we'll check Sunbiz to see that the company that you, have registered is basically Florida. If you're Schedule C, you live here, then that's it. But they'll work for something like that.
And it can work with, people, one that's self-employed and one that's W-2, like.
Yeah, you can mix them. You can mix them. You can also add other subsidies to this program. If you're in Miami and you are adding a program called MD that does up to 28,000, you can actually put it with this program. As a third means. I don't recommend it because that program is a pain in the butt, but yeah, you can do it. Okay, so the Florida bond program is very similar. There are some more restrictions on this one. This one has a lower income limit. And this one is based on household size. So it goes from 1 to 2 households to greater than 2 households. And I don't know that I wrote the income limits here, but everything else is the same. I did, okay. So Miami-Dade, as you can see, 103,000, that's pretty low. For 1 to 2 people. And 3 or more, 118,000. Still good size loan income limits, but not as nice as Hometown Hero. And there's another nuance here that this is really a pain in the butt. And they use something called household income. Hometown Hero uses application income. In other words, you apply for the loan and you make $34,000. So you're right under the income limit. But your wife makes $100,000, or your spouse makes $100,000. You could still, it still works on Hometown Hero. But on this program, it doesn't work. We count everyone in the household, whether you're a borrower or not. We don't have to add you to the application, but we will count your income. So we have to fill tax returns, and if we see, you know, that, and you have to certify it as a spouse, whether you make, any money at all, and whatever you make, you have to provide pay stub, and we have to factor that in to this income limit right here. So,
Mario,
yes.
can you combine any of those programs?
Yes, you can combine, well, no, you cannot combine Hometown Hero in this one. But you can combine a third-party down payment assistance program.
Or an MTC.
That's not part of this organization.
Okay, thanks.
Yeah. So we use this program as a last ditch effort. Now, Miami-Dade has one also, and it's $15,000. So that one's nice also. It comes in FHA and conventional. And you can not combine it with these programs, but 15,000 is better than 10,000. And it doesn't have the job requirement. So that's a good program also. So this is another version of the $10,000 program. It's called TVA. And the only difference between this one and the other one is the income limits are a little more generous. And it uses application income, it doesn't use household income. Do you need to remember any of that? Nope, that's our job. We'll figure out the best program for you all. Here are the income limits for the TVA. You see it's a little bit better. Really not that much better, but a little bit better. And now this is the new program that we have. It's called Access Zero. It offers up to 5% assistance for down payment or closing costs. It's open to first-time home buyers and repeat buyers. Minimum credit score 600. It's FHA only. And the DPA, which is the down payment assistance, is structured as a fully amortized second mortgage, which means that you have to pay it off. Here are samples on this one. You guys have a better view of it, but not as nice. You need $13,000 to close on this one. This was the rate yesterday. I bet you that rate's 7.5% today. This one does have discount points, which are not pretty. But look at the credit, in this case, it's $18,000, and this one is 20, and this one's 21. It's 5% of the sales credit. So you could still use this program. This would be my second option that I would offer the borrower in the event that there's no Hometown Hero funds, or that they make too much money, or that they're not a first-time home buyer. So yes, there is a home for this program, there's an ideal candidate for this program, if it doesn't work under Hometown Hero. So take a look at the payment on the second. $247, $264, it's, you know, it's not pretty, it's based on 10 years, and the interest rate is 2% above the first mortgage, so in this case, the interest rate is 10.99 on 10 years. So if you take 18,750, you amortize it over 10 years at 10.99, you get 247.67. Jermaine,
So let's say 3 years time, the rate goes back to 2%, does that goes to 4%? No.
this is the rate for the life of the loan. But if the rate goes down that low, you're refinancing.
No, it's okay, that's what I'm saying, I
Yeah.
refinance, it goes from, the rate is 2%, then that rate is,
No,
that goes.
that just goes away, you just paid off.
Yeah, because if you refinance. you have
Yeah,
to pay it.
And you cannot support, so. These loans will allow, the second mortgage can be resubordinated, that's what we call it. In other words, we're not gonna touch the second, but you have to wait 3 years. So if you're within the 3-year period of you closing on this loan, you have to pay it off. If it's after 3 years and you wanna refinance and you don't wanna touch that second, which I don't see why you would. You would,
We'll save more,
huh?
we'll save more if you refinance, so.
Yeah, you would, right? Yeah, it doesn't make sense. I don't know why they put that, they even put that restriction on there.
This would have fixed on the second too.
They're both fixed, yeah.
2.7.
But look, we're a Hometown Hero. I think this number was 7,000. Can somebody read, what, how much is 7,000?
Yeah.
How much? No, on Hometown Hero.
7,200.
Yeah, so this is an extra $5,000. Plus $6,000. So you see the difference, the Hometown Hero is so much more nicer. And what is the payment on the first one? On Hometown Hero.
It was 2002.
3,262.
So this is $300. Well, the difference is this.
300.
Yeah, the payment on the second.
Yeah, 300.
Yeah. So it's not an ideal loan, but it's definitely get you in for a lot less. If you didn't have this at all, you'd be bringing in $30,000 for closing. A regular fixed loan. So think about it that way. And those are our beautiful pictures. And now, it's a Q&A, and generally, it doesn't necessarily have to be about this, yes.
So my question is, so the water requirement, it says for, hometown area, it must be able to have 3.5. You must be able to produce, 3.5%. Is it the same thing with access zero?
Well, yeah, so all our fixed loans require 3.5% down payment. The down payment is assistant coverage.
Right.
So the bar typically doesn't have
No,
to.
that's fine.
Yeah. So if you're, this bottom line number, Jermaine, is the number they have to bring. This factors in everything.
No, what I'm saying is that, no, the difference is that, for you to qualify for the first time home buyer program, hometown area, you must have that amount.
No, for you to qualify for a first time home buyer, it means you have not owned the home in the last 3 years.
No, not that. So whenever you run the paper, it says, to meet the requirements to get that hometown area is, you must be able to produce your own money of 3.5.
No, that's not a requirement.
When people already have that, it was here, it's required.
You mentioned it earlier that they all have to come in with something, they start with some money down.
Well, yeah, but it's not 3.5% down, it's whatever, so let's go back to the Hometown Hero slide.
Remember, when we talk about closing costs, it's down payment plus prepay plus escrows, all that. So that number, out of that total number,
It's cut off there, but it's on your paper. So, Jermaine, what they have to bring in is that bottom line number that you see
Yeah.
on the Hometown Hero, it's cash to close.
So
That factors in there, because again, you're looking at it from a, where am I applying the money? This is just a credit on the closing disclosure.
But so when you're pre-qualifying them and you're looking at how much down payment they have for the purchase, do they need to then just have those $8,000 or do they
Yes,
at least
that's it.
have?
No, just the $8,000. And we're not really looking at how much down payment they have, we're looking at how much money they have. Because we don't look at it in those terms, we look at it in a mathematical term. You need this much money, how much do you have? And that, the amount of money that you need to close on these loans can be a gift, by the way. Doesn't have to come from you.
Oh.
It can come from a family member.
Any other questions?
If you have two borrowers and one of them has owned a home in the past 3 years, then it none of them qualify, correct?
Right, but we know that, so we find a little trick around that.
The FHA zero access.
No. We call them a co-signer. Co-signers do not have to be for the homeowners. The only problem with that is that we do have to count the co-signer's rent for their housing expense. If they get a letter from wherever they live, saying that they're rent free from the owner of that house, we don't find anything against it, and that's how we go around. You can't call a husband or wife co-signer. Right, so that's how we get around, that's how we get around the home buyer situation, when you have two people that are buying on the house and then oh, we need the income, so, you know what I mean? Yeah, exactly. I mean, you go planning for your domestic partner. They don't need to know that you're. Right.
Anything else?